Today we are going to talk about Bitcoin. It must be said that the situation is quite ambiguous. On the one hand, the monthly time frame still shows a bearish trend. On the other hand, on that same monthly time frame, there is a rather strong oversold condition. The weekly candles clearly indicate growth, while the daily ones, well, they're neither here nor there, but in principle, they also allow for further growth above $67,000. And let's take a look at what we have on the chart. In front of us are the monthly Bitcoin candles. Let me remind you that I do all my reviews, analytics, and trading on the QuantFury platform. Here you don't pay any commissions at all, and you can trade not only cryptocurrencies, but also stock market instruments, ETFs, the Forex market, commodities, gold, oil, and gas. Join our friendly community and pay no fees, no commissions. The QR code is on the screen. Let's get started. Monthly candles. Pay attention to the dotted line of the upward trend. It was broken quite clearly and confidently during the course of last month. If we take a much closer look at the chart right now, we will see that we are steadily approaching it. So, somewhere around the level of $69,000, we might very well test it, and that could potentially be the upper limit of the growth for the time being. On the other hand, we have already reached the midpoint, that is, half the body of the previous month's candle, and this could also be the limit of the correction. But that's not all. Notice that the monthly candles last month engulfed 3 months of growth. If we look at the highs, they were rising for 3 months, and the lows were rising as well. Well, it's true that the May candle closed with a red body, but without a bearish engulfing pattern. But the June candle clearly indicated a downward priority, and our targets are set. This is the range from $35,000 to about $45,000, $46,000. And that's also where the 100-month moving average runs. So even a rise to the base of the June candle, which is about $73,500, is not a guarantee of a market reversal. It's just the limit of the correction. But anything above that, if the monthly candle for July, August, or September closes higher, would already signal a trend reversal, at least formally. Now let's pay attention to another important level. Let's mark it right now. This is the lowest candle close we've had, if I'm not mistaken, in February. Take note, let's make this level white so it doesn't blend in with the blue one. That's $66,973. These are exactly the values we approach today because today's high is the monthly high, which is $66,956. So in fact, we fell short by about $15. That's up to $973. And this could be a turning point. But since we've climbed this high, it would make sense to also test this dashed uptrend line, which is somewhere around $69,000, though that's not necessary at all. Alright, we figured this out. Now we're switching to the weekly candles. It's probably worth removing the markings here, since we don't need them. Now we'll hide it. And here the analysis is very simple. Notice, first of all, we had a breakout, turned out to be a false one, of the 200-week moving average, which is shown in orange on the chart. That is, the weekly candle from June 22nd closed below it and was potentially pointing to a decline toward the 300-week moving average. But if that had happened, it would have meant that we made a breakout without any pullback through the 50-week, 100-week, and 200-week moving averages and went straight to the 300-week, which is extremely rare. Therefore, considering that the candle from June 29th, here the cursor is on it, did 3 things at once. First, it set a new yearly low. That is, if we look at it up close, you'll see that it set a new yearly low at $57,800. Furthermore, second, it completely engulfed the previous bearish candle, which had also notably set a brand new yearly low, just one single week prior to this movement. And finally, the third thing that this candle from June 29th did was close above the 200-week moving average, thereby marking a formal market reversal from a downtrend to an uptrend. The market reversed from a downward movement to an upward one. Accordingly, we immediately had several targets. The first target is the opening point of the previous week, which was the week of June 15th. So this was approximately at the level of $66,000, but to be completely precise, it was $65,746. And now we have the next target. This is the opening point of this large red candle from June 1st, which is already $73,674. And this is also the opening point of the June candle, because the week started together with the beginning of the month on June 1st. Well, this is that large red week. Accordingly, we can assume that this movement won't necessarily be straightforward. That is, it's not like we'll just take off and fly straight up, right? It could be somewhat volatile. We might go back to the 200-week moving average again. Well, overall, there are reasons to believe that we will move towards the area of $74,000, and at the same time into this same region. Let's try to draw it, although the lines will appear now. This is roughly how the 50-week moving average might drop. Let's make it green, since that's how it's marked on our chart. So, accordingly, the price might move something like this, right? That is, somewhere around here they will meet. The price might reach the dashed line first and then linger around it for a while. So let's estimate that by the end of August we might be somewhere around $73,000, $74,000. What else do we have? We have a very important key level. Let's also mark it now in white. Here is the close of the green candle. But for some reason I marked it in red. Let's use white. Maybe that's a sign? Maybe we'll reverse from this level. But this is the point where our previous correction ended, which was on June 8th, and then we went on to update the yearly lows. Accordingly, in order to talk about a potential rise to the area of $73,000 or $74,000, we need to see that the current week closes above this level. Here it is, the white one, $65,746. If that happens, then in that case, there is a high probability that we will see movement somewhere around here. Well, above 70,000 to put it simply. Finally, if we look at the RSI, it is also showing positive momentum right now, and at the very least, it could reach the value of 50 or maybe even 70. The weekly candles are clearly indicating growth here and now, but it's very important that the level of $65,746 is broken, because if we don't break through it, there could be another reversal with new lows. So let's sum up the interim results. The monthly candles indicate a decline towards the $46,000 area, $35,000 somewhere around the 100-month moving average. At the same time, they do not rule out growth towards the $73,000, $74,000 area. The weekly candles right now indicate that growth towards the $73,000, $74,000 area is more of a target than just an assumption. But for this to happen, we need to close above the $65,746 level. That's all. In other words, for now, we have the right to consider this growth solely as a correction of the downward movement, with a subsequent continuation further down. That's what the monthly candles are indicating. And finally, let's reveal all our markings again and switch to the daily candles. What do we have here? Here, pay attention, it's also an interesting situation. Here, the price has reached the highest closing point. Well, actually, it coincides with the level we marked. Although no, it doesn't coincide. With the daily candles, the situation is a bit different here. There you go. This is the level of $66,328. And again, looking at it from the perspective of the daily candles right now, we really need to see a definitive daily close above this specific level. Because if we don't actually see that happen, there is a very high probability that there was just a temporary attempt to break upwards, but it ultimately failed to hold. And then a pullback may follow to the area of $63,000, maybe to around $62,300, that's the blue level, and finally to the area of $59,000. Right now it's a decision point. I can't say with absolute certainty that we will go higher, but the weekly candles are hinting, let me emphasize hinting, that we might go higher. Let's wait until the end of the week, however long it takes. That concludes the review. So in other words, it's not exactly a priority, but we do have the prerequisites for continued growth toward the 70,000 plus area. However, we've risen and have now reached a decision point. That's why you shouldn't rush to make purchases right now. Well, and probably you shouldn't be selling either, because there isn't a single bearish engulfing pattern on the daily candles here. and those are decisive for indicating or determining the trend direction. That's it. And as long as there are only green candles here, we formally stick to the logic of an upward trend. Let me remind you that we did all of this on the QuantFury platform website, trading.quantfury.com. The QR code is on your screen. Zero commissions, thousands of financial instruments. Join us. See you next time.